Welcome to the Bear, the Bull, and the Ugly podcast with Stephen Kalayjian, your no-nonsense guide to the markets. Whether you're watching us live on YouTube at TradeEZ or listening to your favorite podcast platform, we've got you covered. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Hey everyone, I'm Stephen Kalayjian, and welcome to the Bull, the Bear, and the Ugly. 41 years of experience. Let me tell you what we saw here this week. Unbelievable trading patterns, but today we saw a lot of stocks that were in the bull camp. We saw Airbnb with phenomenal earnings. Stock gapped up over 20 points. Roku, another great stock today, up more than 10, 12 points at one point. And then we saw the ugly, the bear, the Kabooshed on stocks like Coinbase. We saw Lilly and we saw gold. Now, I've been calling for a short in gold above the 29.60 level, and gold actually dropped all the way down to 29.62. I am looking for gold to pull in another $50 to $80 here to set up a really great pattern off the daily charts. Maybe it gets, I'm hoping, below 2,800, but the next move up in gold will be over 3,000 based upon my work. So today we had the retail sales number. They came in stronger than expected, but guess what? I've been calling this for the last 3 weeks. We're going to make a new high on the SPY, and we did. The spiders made an all-time high. Now, what that means is the NASDAQ did not, and the Russell and the diamonds did not as well, the Dow. But I expect the S&P futures to get up above the 6180 to the 6200, 6210. I want to see that. And then I'm expecting a very, very sharp drop here, probably into mid-March, and then make a series of higher lows, and then another continuation pattern. Ultimately, get to my 6,500 target. Now, I was calling for 6,500 back in August of last year, late August, early September. And I just saw the patterns, and I just said, this market's poised to go a lot higher. Now, you're going to get your pullbacks on January 24th on a Friday afternoon. I said, look out below. I was on television doing a segment, and the next day on Monday, the S&Ps dropped, and they were, I think we dropped about 180, almost 200 points off the high on the S&P futures, again, making a higher low. And then I thought there was a buying opportunity between the 59.20 and the 59.40. I think the print low was 59.47. So just missed it by a little bit there. So we saw stocks, like I said, Coinbase down over 23. And this is what Bitcoin up on the day. We saw some stocks like Lilly getting absolutely kabooshed. Lilly was down 28, Coinbase down 23. Now, when you see patterns like that I'm going to show you here, these patterns are just astronomically. All you want to just do is just every bounce just short them. So if you look at Lilly here, let's look at Lilly really quick. All right. You saw Lilly on the 30 and 60-minute time frames. When Lilly got the sell signal here on the 30-minute time frame, you can see the rising ADXs, the big selling pressure here. All right. You can see the big selling pressure here. MACD's negative, rising ADXs. And all you got to do is just take, when you have that type of condition, you look at the smaller time frames. And here was a major sell signal when my algorithm reversed the sell on the 5-minute. It correlated with the 15, the 30, and the hourly. And then you just on that type of strategy, when the ADXs are rising, you just look to sell them. And then here's another bounce off the 5-minute, and then another bounce here, 2. Here's another bounce, 3, and here's the 4th bounce. So my patterns normally on a smaller time frame last anywhere from 4 to 6. I mean, I probably get 4 to 6 great trades a day on using the 5-minute, and 2 to 3, sometimes 4 on the 15-minute time frame. So we really didn't get much of a bounce on the 15s today because of the, look at this big, this is the kiss of death. And when you see the yellow dots within the algorithm, that is a clear indication that the big selling pressure, that's the price within the algorithm. You cannot mess with this type of pattern right here. The big selling pressure, rising ADX, My algorithm is negative. And then you just look to short every bounce in a stock like this, or sell calls or buy puts and just trade it accordingly. All right. So also Coinbase, another good one. Now Coinbase, okay, on the opening today was a really great pattern. This is called a down and up pattern. You can see the 15-minute time frame reversed to sell here, and then you got the 30-minute time frame reversing right here, right at 10 o'clock. And then you got the 60-minute time frame right here reversing as well at 10:30. So once you get everything aligned, when you get the 15, the 30, and then the 60-minute time frames all reversing to sell, you got to look to short on the 5-minute time frame, the first bounce, and then the second bounce was the short on the 15. And that happened roughly around 12:30. I believe it was 80.5, 81 on Coinbase, and Coinbase closed at 274. These patterns tend to repeat themselves based upon the years I put into the research and building this. Took me over 9.5, close to 10 years of building this and doing the research. And everything I do is predicated on using combination methodologies. You have 41 years. I have over 41 years of experience, worked on four exchanges. I work with some of the largest and best traders in the world. And I've traded nearly 2 billion shares in my life, and I still trade, and I love it. And for me, there's no greater joy. Today, my phone's been blowing up with people telling me how well they did today. And this is all about being consistent each and every day. And that, to me, is the most important thing. For me, I always tell everybody my legacy depends on your success. And all it is about just doing the work. If you can do the work, put the time in, learn, ask questions. It's all about one thing. It's about learning and being able to move forward and give everybody the opportunity to be able to succeed. There's no greater joy in the world. Every day I come in here, my mind is completely blank. All right. I trade what I see. I have no opinion. Today, Roku, beautiful pattern in Roku here. After the, I caught a really great short in Roku right after the opening. I mean, this Roku trade up to 04. I was scaling into short, and within, I don't know, 8 to 15 minutes, it traded all the way down to 96. Then I had this really great long on Roku off the 15, the buy divergence, the oversold condition into the positive MACD, rising ADX. You can see that, and the oversold condition. All right, beautiful pattern. And so it's an unbelievable long pattern. And what you see a pattern like this, right? And I've been doing this so long that you get these pullbacks. You can see the run up here. So I was buying this under 97 in Roku, and boom, look at that. Ran over $3. This is a beautiful pattern. Looking at Roku again, got a couple more oversold conditions. Now, the problem is when the MACDs are negative like this, the odds are about 85% that you're not going to make a new high. The high was 104.96. MACD went negative. It never touched it again. The high, even over here, was about 100. And over here, it was 100 and change. So even though you got the oversold conditions, when you're taking the long, don't expect to make new highs here. Look at Airbnb, another great stock. Look at this gap up here. And if you look here on Airbnb after the earnings, you can see this was a really great long here on the 15-minute time frame. But again, I took the short in Airbnb right around here, around the 02.5, 03, and then it just traded it, and then got the oversold condition. Once the algorithm reversed to sell on the 15, there's again the 85% chance that the highs are in for the day, and then you can see the negative MACD. Now the stocks I just showed you, Roku and Airbnb, these stocks are same with Hood, HOOD, Robinhood. These stocks in my research, in the next, anywhere from the next 1 to 7 days, I want to get a nice a really great pattern, pull in and boom, right back up. The same pattern like IBM here. IBM, I was shorting this IBM above, for a trade above the 265. And then IBM had blowout earnings. You can see the price from the 10-bar moving average. IBM got all the way down below 247, and look what it did. Dropped from 265 to a little below 247, 18 down, 247 under, up to 261. IBM ran, you can see there, 14 plus points. So again, this is the type of pattern I'll be looking for in Airbnb, in Robinhood, and in Roku. Also Costco, another great name. I'll be looking for that. Also Crocs, CROX. So these names are names that I'll be looking for long patterns to set up on the daily charts. All right. We saw some really a PLTR. This is a name I think is going to have some downside. This is another name. You can see PLTR after the earnings, right? You're 19 points away from my 10-bar moving average. We were short in PLTR from 1980 all the way up to 20 and a half today. I would not buy this, even though there were some good buy signals on it, because I think the risk to the downside is just way too much. You're almost 19 points from this 10-bar. This is going to be another name in the same category as Hood, Airbnb, Roku, where I'll be looking for pullbacks here and then another push up. All right. We saw stocks like SMCI today reversing here and having some really, really good volume on SMCI. It pushed up. It closed near the highs of the day here. And you can see SMCI reversed to buy here on the daily. So I'll be looking for pullbacks on SMCI here, and then another big push up, hopefully to the 52, 53 target. I had a really great call this morning because I'm bearish on gold. What happened? Look at dust, up 7%. I told the people in my morning stream and then during the day that I would be looking to buy dust on the 43.5 today. And if you look at dust, you can see dust was trading here around the right below the right on the opening at 945, below 43.25. Dust never looked back. The 15-minute time frame reversed to buy. You can see here the 30-minute reverse to buy. All right. Now, and you can see now with the 30-minute, look at this positive MACD, rising ADX. Look at the yellow dots into the blue. Now on Monday, I'm expecting to get a nice pullback on the 30-minute time frame on dust here, and then another push up. So I think gold is headed south, which is good because you're in a significant uptrend. You're in a bearish trend in dust. So I'm expecting a nice, decent pullback. Gold should rally a little bit on Monday. Get this to pull in. Then I think gold's going to get kabooshed come Monday, Tuesday, Wednesday next week. And again, if gold's down 50 today, I'm hoping that gold drops another anywhere from 80 to 100, 80 to 110 more dollars from here. I'd love to see gold get to that 2780 level. And then I think we're going to have a really phenomenal, great pattern on gold. All right. When we come back, I'm going to show you what I expect for Monday. For Tuesday. We're off Monday. So, and trust me, I need the 3 days off. I'll be right back. Okay. So we got a long 3-day weekend here. Whew, man, I can use it. I'll tell you. I worked till 11 o'clock last night. And so what I'm expecting next week here is still a continuation. I'm still looking at the bigger time frames, the 30 and 60-minute time frames. I got the big buy reversals yesterday on the underlying ETFs. So I'm expecting another continuation. I'm still in the camp. I want to see the S&P futures get to that 6180. I'm praying for a print of 6200, maybe a little higher. And then I'm telling you, I say, let them have them, right? Because for me, I'm telling you, I think they're going to get kabooshed in the next 3 to 4, probably 2.5 to 3.5, 4 weeks. I think we're going to get a really sharp drop in the first or second week in March. But again, I think that's going to be a healthy pullback. Nothing, I'm not saying the bear market. All right. We had that print low of 58, was at 58.10. Then we dropped down to 59.47 on the S&Ps. So I'm expecting some type of a drop, even a higher low, maybe 59.80, maybe even, 59.75, 59.90 on the S&Ps. Make a higher low. and then another push up. Again, this is going to be a series of 4 or 5 until we get to that 6,500 mark. As far as this week, we had the CPI number, hotter than expected, market shrugged it off. PPI, hotter than expected, shrugged it off. Retail sales were the highest in a year, very strong, market shrugged it off, right? So I think we're poised to go higher next week, especially looking at my bigger time frames. Now, I think come Tuesday or Wednesday, we'll get a pullback to get the 60-minute time frames to get oversold. And when we get that oversold condition, I think that could be the push that we need to get that extra, 50, 40, 50, 60 push handles up on the S&P to my number. And again, if we do get to that number, we'll be extremely looking at my chart here on the S&P futures, and I'll switch it to the daily. I think then we should have, right now we're 54 points from the 10-bar moving average. I'd like to get this to 100, 120, 130, which if you get up another 60 or 70, you'll get that. That means you're looking at 6,200 on the S&P. And if you get anything north of 50 plus, this is not good enough for me. But I want to see, I'm not shorting here because I still think the upside's coming, especially if we get this first pullback on the 60-minute and then we get another big push up. Then I think, looking at this chart right here, the market's in trouble because you'll be making new all-time highs, and the MACDs here on the weekly will not confirm. And I think, guess what? I think they're going to get absolutely kabooshed. All right? So that's what I'm expecting for next week. Meta is very, very, very overextended on the daily charts. So I'll be looking for, if you look at Meta here, it's in a very, very big uptrend. And you can see here, on looking at the daily here on Meta, is now $44 from the 10-bar weighted moving average. It actually was 48 because the stock dropped about 3 or 4 near the bell. And you can see eventually you're going to get a nice pullback here eventually in Meta, and that's what I'm hoping for as well. So this pattern that I'm showing you in Meta, in Robinhood, in Airbnb, in Roku, I'm expecting a pullback hopefully in the next, up to 7 days from today. We'll get these nice pullbacks, the same pattern that I showed you in IBM. Crocs, same name. And then I think, those type of names, I think eventually they'll set up for really great long patterns. All right, when we come back, I have a great story to tell you today. So I'll be right back. So someone called me today, and it really touched me, and, I'm not allowed to give investment advice. I love what I do. It's all pure educational guidance. And, and so for me, there's no greater joy than for me to talk to people. I like to relate to people. I like to hear what they're doing. I've been doing this for a long time. And I just love the sound of when people get excited to learn. And I say to people all the time, if you put the work in, you can do this, right? And I've been doing this over 41 years. August 1st of this year will be 42 years. I can't believe it. But I wake up and I pinch myself because I love doing this every single day, right? And, for me, I got to tell you, today it touched me, really. He called me and he said to me, Steve, I really owe you a lot. I said, you owe me nothing. I said, what did I do? And he said, well, I was watching you on this show on January 24th, and I had significant 6 figures in the market at the time. And after you were on, I liquidated everything, and there were options. And I said, wow, that's a staggering position to have for options, And he said, yeah. And I said, wow, that's stocks and options and everything. So he said to me, heavily in options and stocks. And I said, well, okay. So, and he said that Monday, the market dropped significantly, right? And I would have been wiped out. And I said, well, wow, I'm glad that worked out for you. He said, had I not watched it, I would have been really in serious trouble financially. And I just took your listening to what you were saying and your guidance in your technical analysis, and you were dead on. I couldn't just believe it that happened the next day. So I said, well, I'm kind of, thank you for the kind words. I said, but I got to tell you, to put all your eggs in one basket like that I don't know if that's prudent. I could never do that. If that was my nest egg, and I mean, I was so grateful and humbled by what he shared with me, right? And I'm glad it worked out for him and his family. But I said, just rethink, in my opinion, right? I would just be rethinking that type of move, right? If you're going to trade, take a certain portion of the assets and do something like that. But to go all in, I mean, let's just say you didn't watch me that day, right? And let's just say that you did blow up and you wiped out your account. Where are you going to be now? I said, so the good Lord was watching over you, right? But I just think that, again, I can't tell anybody what to do with their money. It's not what I do. I don't give financial advice. But I just said, in the future, if you're going to trade, take a portion of that money, and then you can do, that's what I would do, right? If I was me, I would be taking a portion of that money and just trade accordingly. To take all your well, I don't know, his life savings or anything like that, but even a significant amount, but then to put it all, anyway. So that really, it was great story. I'm glad it worked out. I'm glad I was able to read the market correctly based upon using my technical studies. Okay. Again, with 41 years of experience, I've seen it all, right? But I saw something there that had a lot of red flags. And then guess what? Boom. That Monday, they got absolutely kabooshed, right? So with that being said, I think the moral of the story is, if you're going to trade, take a certain segment of money that you have. One of the great lessons I ever learned, may he rest in peace, was a good friend of mine. He said to me one night, it was 2:00 in the morning. We were in Stamford, Connecticut. And he said, Stevie, I know you want to trade badly, but let me tell you something. He said, if you ever want to buy a home and you're trading for a living, make sure you buy it for cash. I said, Jeff, why do you say that? He says, because when you're trading and you're having a bad day, a week or a month or whatever, you never, ever want to worry about paying your mortgage. I said, oh my God. I said, thank you, right? And guess what? When I bought my first home, when I had my girlfriend, and then my girlfriend and I got married, I bought it for cash. I never forgot what Jeff told me. So anyway, a lot of great stories along the way. You'll be hearing all of them on my podcast. Have a great weekend, everybody. God bless you. And thank you for joining me here on The Bull, the Bear, and the Ugly. I'll see you here on Tuesday. Have a great weekend.
Thanks for tuning in to the Bear, the Bull, and the Ugly podcast with Stephen Kalayjian, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe on YouTube at Trade Easy or on your favorite podcast platform. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.